you don't necessarily need to be retired anyway. They think retirement is going to be this time when they're going to be happy and everything's going to magically get better in their lives. That's totally false.
What's one thing you wish more people understood about financial independence?
I think the key thing is you have to really switching your mindset from retirement is the goal to, yes, I'm financially independent. That's insane. That's so unattainable. Your savings rate really determines how long it's going to take you to become financially independent.
How do you think about balancing financial freedom with enjoying life now?
I think this idea that not working at all is the goal. It's going to be hard to flip.
Hello, and welcome to another episode of Your Retirement Planning Simplified. I'm your host, Joe Curry. And today's episode is going to focus on what those nearing or in retirement can learn from FIRE principles, even if they're not retiring early. We'll talk a little bit about what FIRE is in a minute. And my guest today who's going to help us is Chris Mamula. So Chris was an early retiree. He retired at 41 years old. He is the author of Choose FI, Your Blueprint to Financial Independence. He's a contributor to CanIRetireYet.com, one of the most respected FIRE blogs, which has been around for quite a while. So welcome to the show, Chris.
Thanks for having me. It's a pleasure to be here.
Yeah, happy to have you. So as I just mentioned to our listeners, we'll explain what FIRE is because I'm sure most of them have probably missed what we would consider FIRE, but maybe you could fill our listeners in.
Yeah, FIRE is just an acronym meaning financial independence, retire early. I would say that most of us who blog about this and write about this and are living it are more focused on the financial independence part, which gives you the freedom to kind of do whatever you want. I think most people, a lot of the finance industry is aimed at retirement. So the RE part, I think, kind of sticks around to kind of reel people in because that's where people are and we're meeting them there. But I think financial independence is the real focus for most of us who write and talk about this stuff.
Okay, very cool. And I noticed, so on your blog, so there's the three of you on there, and you've all kind of retired at different ages, all earlier than traditional, but not necessarily everyone at 41 years old, right? So it's just getting into financial independence maybe earlier than we would typically see. If you retired at 41 years old, you obviously started and sold a tech company pretty early on, right? Is that how your journey goes? Or maybe you can just tell us a little bit about your journey towards financial independence.
Yeah, no, my story was a bit more boring than that. My wife and I were both first generation college graduates. So I was a physical therapist. She had a parallel career, similar income. And so we started just, making more money than either of us were used to our families having growing up. And it was just kind of intuitive to us that maybe we'd want to start a family someday. So we just started living off of her salary and we used mine to pay off student debt and then start saving for a home. And it was working well. So we just kept living off of her salary and kind of started using mine to pay down the mortgage with one check and then investing the other. And then when we paid off the mortgage, throwing all of mine into investments. And it just kind of worked for us and it snowballed for a while. And we ended up in a pretty good position. But there was no FIRE community back then. So we really had no plan. We had no clue what we were doing, which was both a blessing and a curse. And I'd be happy to dive into that a little bit. But so we were just saving a lot of money, had very low expenses because we had no housing expenses, which is the biggest expense for most people once we got our house paid off. And we were building investments pretty quickly. And that was kind of our journey with no real endpoint to it or no real goal, just kind of floating through.
Okay. So how did you guys make the leap into early retirement then if you didn't really have that end goal?
Yeah. So my wife and I, we did a backpacking trip fresh out of college into the Grand Canyon. And just fell in love with the outdoors. So we started backpacking and then we got into rock climbing. And in rock climbing, there's this kind of term of being a dirtbag, which most people, if you call them a dirtbag, they would consider that an insult. But in the climbing community, there was just kind of this term of endearment. And it was people that basically, a lot of people like live out of their cars and they go all in on this lifestyle. And so, I mean, it was, we didn't have that peer pressure to kind of have like the fanciest lifestyle. And if anything, our peer pressure was to like live down to other people's in our community to their lifestyle. And so, it was just natural for us to be frugal because we were doing everything we wanted. And then we were going to kind of just take a leap. We wanted to move out west. We really fell in love with the mountains. So we were probably 10 years into our journey, didn't think my wife was able to have kids, and we were just going to wing it. And then we found out she was pregnant, like as we were in the process of putting our house up for sale. So then we got really serious. I started reading these FIRE blogs and got into the more traditional investment community. The Bogleheads was a big influence on me. And that's what got me very serious. And so probably after 5 years of doing that, we kind of realized, we're close enough that we could kind of make the leap. and our daughter was going to be starting kindergarten. And so we still wanted to move west. So we just I quit my job and we up and left and moved from Pennsylvania to Utah, where we live now.
Okay. So I want to come back to what that transition has been like for you. But before, you mentioned how not really knowing what you're doing and just kind of living frugally was good and bad in different ways. What did you mean by that?
Yeah, sure. So on the curse side, and kind of what got me into writing about personal finances, we had no clue what we were doing. And so my parents did, I mentioned they both were just high school educated. My dad started a small business. They didn't make a lot of money, but they seemed to me like they were doing well. They were able to help my brother and I through college. And so when we got to this point where we could start investing, we just asked them, what did they do? And they introduced us to their financial advisor. I'll put that into quotes. He was basically a commissions-based salesman.
Sure.
We were getting sold loaded mutual funds,
Right.
Being advised to pass up on tax advantage investment of our retirement accounts to invest with him because he had, quote, better investments, which was true. They were better for him, not for us. We ended up with a variable annuity, all these things.
Right.
And so we went down that route and we made a lot of mistakes. We could have actually had a lot more money, gotten there a lot faster if we had a plan. So that was the negative. On the positive side, now that I'm in this community and I interact with people, I think a lot of people get really focused on like hitting a goal. Retirement's going to be this magical time when everything's going to be better. I think they live so frugally. They're so focused on the future that they miss the present. So like I mentioned, we kind of just naturally, we're frugal because we got into this climbing community. In the process of chasing adventure, we went to Africa. We climbed Mount Kilimanjaro, did a safari.
Awesome.
We did high altitude mountaineering through South America. We've been to the Super Bowl twice, actually.
Oh, wow.
So because we weren't so focused on the future, we were just kind of, and I said we lived off my wife's salary and saved mine. That's kind of the short version to make it for a podcast. But in reality, like some years we splurged and spent some of my money. Some years, like after our house was paid off, maybe we were saving 60 or 70% because we didn't have a mortgage anymore.
Right.
So again, we kind of just were going with the flow and we didn't have a plan. And so that allowed us to just have a lot of amazing experience that a lot of people wouldn't spend on or wouldn't be able to. Because we were living so far below our means.
Okay. So really, I mean, you guys just didn't fall into like the lifestyle creep and you just make good decisions with your money, really, it sounds like.
Yeah.
So now when you talk about the curse, and so, but thinking about the people who now are so focused on that goal, like I have to retire by the time I'm 40 or whatever that is, what would you say, whether it's someone's 40 or someone who's 55, like, what do you think about, when we're trying to decide between like hitting these goals of financial independence versus living today? Like, what are your thoughts around that?
Yeah. So I mentioned kind of when I was explaining what FIRE is, I think a lot of people, they think retirement is going to be this time when they're going to be happy and everything's going to magically get better in their lives. And I just think that's totally false. So I really kind of encourage people, like, what would you want your life to look like today? And then how do we go about building, even if you can't totally do that? Like if you want to live in a van and travel the whole world, it's going to be hard if you have a traditional job. For most people, like if you work remotely, maybe you can do that. But for most people, the things that you want to do, you can start building that into your life today. And while you're living responsibly financially, while you're holding a job. And so like, how can you start to build more of that lifestyle? And in reality, you don't necessarily need to be retired anyway. Like most of the people in the FIRE community, myself included, are not what most people think of retirement looking like, where you just live off of Social Security or a portfolio or whatever. Still earning some money, still doing some work, talking to you right now, doing these type of things that bring value to my life by kind of feeling like I'm helping other people and educating them. And, I think that's pretty typical. So again, kind of what do you really want your life to look like and how can you get there versus this all or nothing and trying to retire completely as soon as possible, which most people, again, don't do anyway.
Yeah, I think that's a really good point there. And that's one of the things we talk a lot about in the show actually is if you are retiring, like what are we retiring to, right? Like retirement isn't just for the sake of retiring. It's like we need to have some purpose beyond work too, if we do become financially independent and want to retire from our career. But just as easily that when we hit financial independence, it might have nothing to do with stopping work. It could just be finding a different work you're more passionate about and enjoy doing and gives you the flexibility to travel or whatever it is that you want to do, right?
For sure.
So back to your transition, when you quit your job, were you quitting the job with the intent like, hey, I'm retiring now, we're financially independent? Or was it just, we're going to make this move and then we'll see what happens?
That was a big, I didn't know. I was definitely burnt out on my career. Like I said, I was a physical therapist. I knew that career is pretty in demand, so I figured I could get a job in Utah or wherever I decided to go. So I quit with the intention of keeping my license intact. I figured like maybe, I would miss it after being away for a month or two and the grass wouldn't be greener. So I was aware that that was a possibility. And so I quit. After about a year, we moved to Utah. I did renew my license one time just in case. So I did the continuing education, paid the fees and everything, but I did it back in Pennsylvania. I never even moved my license across the country. And I can honestly say I never missed doing that. And so I knew after 3 years, like having not even an urge to go get a job as a physical therapist, I was done with that. So, at that point I let my license go and I was fully retired from that. But yeah, I really wasn't sure at the time. It kind of depended on how market conditions went, how I was liking life and just being open to possibilities.
Okay. And what do you think has surprised you most since leaving your career as a physical therapist?
That would be one thing. Like I really thought, maybe I was just, I was with the same company for a while, maybe a fresh start, but yeah, I just didn't miss it at all. That was definitely a big surprise for sure. That I just never wanted to go back and do that again. That might be the biggest.
Okay. Fair enough. Let's just talk about maybe, what are core FIRE principles that you think everyone, regardless of their age, can benefit from?
Yeah, I think this is a great question. One of the things we talk about a lot in the FIRE community is like your savings rate really determines how long it's going to take you to become financially independent. And so like traditional financial advice is if you can save 10%, or if people are really being aggressive, maybe 20%, that's a great goal. And that'll get you to retirement age. In the FIRE community, we're kind of starting with the idea that what if you kind of did what I mentioned my wife and I did, save 50%. Like, so if you're a married couple living off one salary, or, if you can just bank one half of your salary, or however you get there.
Yeah.
And so the traditional, like if you look at like some pretty conservative assumptions on return and spending in retirement, that traditional retirement is going to translate to about a 40-50 year career till you hit financial independence, whereas a 50% savings rate is going to get you to financial independence typically about 15 or 16 years, let's say reliably within 1 to 2 decades. And then I think it's really worth diving into the math, boring as that can be on a podcast, if people will bear with me a little bit, because when people hear 50%, I think a lot of people just recoil, and it's like, first off, this is really hard, it's impossible, and how am I going to do that? And so like one thing I would point out is pretty standard financial advice if you're saving 10 or 20%. And then I like to pair that with another piece of financial advice, which is you should have like a 6-month emergency fund. And so if you're saving, let's just use really round numbers to make this easy, and let's ignore taxes. And so let's say you're making $10,000 a month. And again, some of your listeners might say, only 10,000, I couldn't even live off that. And others might say that's impossible to achieve, but I'm only using this as a example because it's round numbers. So if you're saving only 10%, that means by definition, you're spending 9,000 and you're saving 1,000. So at the end of 1 month, you have one ninth of 1 month's expenses. So it would take you 9 months just to save a month of expenses. And then to save a 6-month emergency fund, you're looking at 54 months, which is 4.5 years just to save your emergency fund. And in the process there, maybe you actually have an emergency. You have to spend some of that. It takes even longer. And people fall off the wagon because it's so slow and so painful to do that.
Sure.
So if you're saving 50% in the same example, by definition, you're spending only 5,000 and you're saving 5,000. So the obvious part is you're saving 5 times as much. So it's going to be faster. But the very much less intuitive part is you're lowering the bar for how much you need. Because if you're only spending 5,000 a month, instead of saving 54,000, now you're only saving 30,000 to hit that 6 months. And you're going to do that because in 1 month, you've spent 5 and you save 5, you already have a month. Yep. So in 6 months, you've got your emergency fund saved, and now you're investing and you're actually starting to see growth, and that growth is going to compound and snowball. And so you see progress so much faster. In some ways, it's actually easier to save 50% than 10% and to stick with it and to do that for some people. If you can get those core expenses down, housing, cars, and food, and just set the patterns and get the ball rolling, it's surprising for a lot of people that works that way.
Yeah. I mean, I guess it's just so much more motivating when you see progress, right?
For sure. And then I think another thing to think about with the whole idea of savings rate. So like you mentioned, I retired at 41, which again, that pretty much math worked out perfectly for me. So we started fresh out of when I was in PT school, about 25. So 16 years was my career. And so people say, oh, well, yeah, great for you. I'm already 50 and, I'm behind and whatever. But the thing people don't understand is the math is the same if you're from 25 to 40 or 50 to 65. And so this math works perfectly well for those people that are behind. And I do think it's worth acknowledging it's hard to change a behavior. So if you've been saving virtually nothing and now you're asking somebody to save 50%, it's going to psychologically and maybe even definitely even like changing some major behaviors and activities, maybe selling a house and starting over there or doing something like that. But I do think like that 50-year-old might have some huge advantages that I didn't have as a 25-year-old. For one thing, your salary tends to increase over time. So I was just hitting my peak earning years when I left my career, whereas a 50-year-old maybe in their peak earning years. When I mentioned when I left my job, it was kind of motivated by having a young child. So we still had like the whole diapers and daycare and saving for college. If you're 50, maybe you're an empty nester and that might be a good time to downsize your house. Maybe you have some of those expenses coming off the books, which you can redirect. Just for me, retiring at 41, we had to figure out how are we going to just bridge the gap to 70 when a lot of people were retiring, and then maybe another 30-year retirement till we got to 100.
Yeah.
So you have less time. So there's just a lot of advantages if you're starting older. Again, acknowledging it does take a massive mindset shift and behavior shift, but it's possible and the math works equally well. And in some ways, it's actually easier for an older person because you have some of those advantages.
Yeah, it makes perfect sense. And then, I mean, for a lot of people, it's not going to just happen overnight, but some combination of being more intentional about spending, understanding where you can cut back. And then and this is like, just like an easy opportunity when you're getting raises, right? And then, so if you're at 50, maybe you're getting some more regular raises and maybe they're more substantial if you're, like you said, in your peak earning years. So most people just spend that extra money, right? So it's just take advantage of that money you're not spending today and just redirect it.
For sure. And then the other thing, like I know you're in Canada and I don't know what your listenership is, but like in the United States, the other thing is like healthcare costs, they don't go away, but they get a lot more predictable at 65 in America when you have Medicare. And then we also have Social Security. And again, I don't know what necessarily the details of Canada's retirement system are. But again, that lowers the bar for how much you need to save too. So again, just other advantages for a more traditional retiree over a traditional fire, if there is such a thing, a traditional fire person.
Yeah, for sure.
People we think of as doing this much younger.
Yeah, we have similar programs as well here. So it's the same idea for sure. So you touched on this a little bit when we thought about, getting so focused on hitting that goal of fire versus living today. So along those same lines, how do you think about, like when you're talking to people and stuff, think about balancing financial freedom with enjoying life now? So I know it's a similar question I asked before, but so not just so much just I'm on the path of this goal, but just how do you find the balance?
Yeah. So I think the key thing is you have to really live intentionally and you have to determine what you personally truly value. So I think a lot of people think they're going to retire at 65 because everybody retires at 65. Mm-hmm. And I think coming out of school, I mean, I certainly saw this. This is kind of what got us on track, but a lot of people, they come out, they go to a realtor and say, how much house can I afford? And then they say, well, let's get you pre-approved for a loan. And they see how much somebody will loan you. And then magically, that's the amount that you are shopping in that range of house.
Yeah.
People will go do the same thing when buying cars. Like you buy the most car you can afford because that's like what you're quote unquote supposed to do. Again, housing, cars, food, that typically, at least in America, and I'm assuming in Canada it's going to be very similar, is going to be about 50% of the average household spending. And so if you can optimize those things and, if you truly love cars, maybe you want to spend a little bit more. But if your true values are spending time with your family or going on vacation or doing things like that, then maybe you don't spend as much on cars and you align your spending with what you truly want. I think that's the key to doing this. Because again, I can see where somebody that struggles to save 10% says 50%. That's insane. That's so unattainable. But I think it's a big mindset shift and you have to find a way to make it sustainable. It's not like a crash diet. Even like I said, what I did, it was fast in comparison to a 40-year career, but 16 years is a long time if you're miserable every day going to work that you hate and are not doing any of the things you want to do, and you're going to fall off the wagon. So you have to find a way to make it sustainable for you.
Okay, that's great. Now, kind of a similar vein here, I'm sure you see this. We see a lot of our retirees who have been really good savers and, they've saved up lots of money, put themselves in a really good position to be financially independent. They have a hard time flipping that switch from saving to spending some of that nest egg that they built and enjoying it and living life through retirement. So, what advice do you have for someone who's having trouble making that switch?
Yeah. So I think this is particularly true for an early retiree, but I think this probably is going to translate to more traditional retirees as well. I think like this idea that not working at all is the goal. For one thing, if you're a natural saver, it's hard to flip that switch. You're 100% right. And we see that all the time in like the FIRE community. And so having some earned income, it just feels good. But also like the idea that no work is the goal. Again, like I definitely value my freedom. I love, like, I'm a ski bum now. I was out mountain biking this morning. I love to do that, but I can't do those things like 15 hours a day. So like, what am I going to do with my other time? So doing something productive, feeling like you're adding value. There's other benefits of work in addition to the financial.
Yeah.
And so switching your mindset from like retirement is the goal, and retirement meaning that you don't work at all, to switching the goal to, yes, I'm financially independent. I can maybe work a more fulfilling but lower paying job. I can work in this career that I still kind of like, but I don't want to do it 40 hours. I can work 10 or 20 hours. Doing that to have some income is very helpful. And then for more traditional retirees, I like to just make sure you have a system, and simplifying that system. And it kind of also works well with the behavioral things, but it's very tax efficient to just first off figure out what income you have coming. So if it's Social Security benefits, if it's a pension, if you have dividends on a taxable account, those are going to be taxed anyway. So just sweep those to your checking account, kind of creating a paycheck for yourself. So it's not as hard to do that as it is to sell investments for most people. And then also that income tends to be taxed anyway. So it's also tax efficient to do it that way. So just creating a system and having a plan, I think, helps with people with spending versus just thinking that you're going to just be able to wing it and sell stocks, and then you're watching what the market's doing. And it's a very unhealthy and unproductive way to go about doing it.
Yeah, in a stressful way for sure. And that's something that, I can definitely say that we do see, like when we go through the planning process and put together a full plan and help people understand their capabilities for spending, it does definitely give some more confidence to spend for sure. So you talked about how work can give you some more purpose and fulfillment and a way to spend time in a meaningful way. What other suggestions do you have for retirees who want to find fulfillment beyond work? So maybe they don't want to do work, or there's not something they can think of along those lines. Like what else do you see people doing where they're still getting that purpose of fulfillment?
I think the key thing is community and relationships. And so having some way to have social interaction and not becoming a hermit who's sitting on social media or watching cable news and just getting yourself into a rage and, not doing things that are healthy for your, like, productive for your mental health. But finding ways to get out into the community and to serve other people and to develop relationships. And whatever that means for you, that could mean work. It could mean volunteering. It could mean like meetup groups around an activity that you like. It could be, churches or religious things, basically whatever makes sense for you. But I think having some type of social interaction is really key and really important for people.
Yeah, for sure.
And not just assuming like, yeah, I'm going to retire because I want to spend time with my kids, because maybe your kids don't want to spend time with you so much. Like, like really thinking this through and not just thinking everything's going to be roses and rainbows and puppy dogs, and like realizing that like just because you're retired, other people aren't. And so like being respectful for them and thinking through and having a variety of activities and communities and relationships that you're going to lean into.
Yeah. Yeah. Well said. I want to switch gears a little bit and talk maybe a little bit about withdrawal strategies. So I'm interested just to kind of hear your perspective and like maybe the FIRE community perspective on some of the more traditional withdrawal strategies, from the 4% rule to dynamic withdrawal spending, more variable spending. Like, how does that apply in the FIRE world, just retiring early? So even if someone listening is thinking, okay, I'm 50, I want to retire at 55, like that's still, potentially like a 45-year retirement period, right? So how does that change things?
So I think the 4% rule, a lot of people criticize. I think in the FIRE community, that is where most people start. And so then using the inverse of that, you say you're financially independent when you have roughly 25 times your expenses.
Yep.
When you actually get to retirement, I think that's probably too aggressive. And particularly if you're banking on being able to do that and stick with it. But I do think it's a great starting point because it focuses you on seeing what your expenses are and kind of, again, what your life cost is going to determine how much you need. As far as like being flexible, I think like being able to be flexible on the spending side is great, but I think it's important to really kind of know where is your money going and how flexible can you be?
Yeah.
So for example, in my case, we have a paid off mortgage. We don't have a house payment every month. We don't have car payments. At this point, because we are essentially financially independent, we don't have a whole lot of we don't have life and disability insurance and those things that are expenses for a lot of people. So most of our spending is discretionary. We're big skiers. We travel a lot. We go out to eat whenever we want to. We buy new sporting gear when we want to. That's pretty much what our spending is. And then giving to charities. So almost everything we do, we can be very flexible. So if you have somebody in that position, then I think you can be a little bit more aggressive with that initial spending rate. Whereas if you go into retirement and you still have a mortgage, maybe you still have car payments. I know some people now are retiring with student loans, probably not fire people, but some retirees, a credit card debt. If you have these liabilities that are going to impact your life dramatically and you have to meet them, then you really have to be honest with the idea of how flexible can you really be if the market, is substantially different. So I think knowing your spending is a very, very key thing, and how flexible can you be?
Okay.
And then the other thing, early retirees have that advantage of they can go back to work and generate some income, even if it's not back to their career, because maybe like we mentioned, like my license lapsed, but I can go back and do some things. Whereas a 70 or 75-year-old, maybe your health is starting to go, and maybe you're at least limited in the types of work that you possibly could do.
Yeah, for sure. When you talked about kind of what you've done since you left your career, what are some other ways that you've seen people like create or, buffer the retirement plan with like, we call it side hustle or extra incomes?
Yeah, I mean, I think you're really kind of limited only by your imagination. I think the thing to understand is when you're, even if you're not completely financially independent and you can't completely retire, if you have enough to create some income off your portfolio and you've eliminated some expenses, like you're at the point where you can cut out some of those insurances we talked about, maybe you don't have a mortgage anymore. You don't necessarily need to make a lot of money. A little bit of money can go a long way. Like whether it's, if you are a golfer and you enjoy going to the golf course and some of those things too, like I see people at, like, again, I'm a ski bum, and people at the ski resort that are greeters and things like that. When you do those type of things, those also, in addition to maybe you don't make a huge amount of money on your paycheck, maybe these activities you're liking to do, now you get a free ski pass or a pass to the golf course or whatever. And so that's money you don't have to spend, and that would be after tax money you have to spend. So that's even more valuable to get it as a free benefit. All those type of things are kind of helpful when you don't need a lot of income. And even if you make, say, $20,000 or $30,000, but if that takes you from a 4% to a 3% or a 3% to a 2% withdrawal rate, that's going to dramatically change your retirement prospects.
Yeah.
So really you're only limited by your imagination once you kind of have some degree of financial independence and you get some of those big expenses off the books, like again, mortgages, insurances, things like that.
Yeah, it makes perfect sense. And that's why, back to your point before, like once you've hit 50, 55, 60, you have that big advantage of that cash you have available now that maybe wasn't there when you had kids, when you were paying your mortgage, and all that's kind of disappearing at the same time. Just take advantage of that extra cash flow, right?
Yep, for sure.
Okay. So final thoughts here. What's one thing you wish more people understood about financial independence?
Yeah, I think there's a lot of value in like just me sharing my story, because I know you said it jokingly, but about like, I think that is how people view this. Like people maybe came from money and it was just handed to them, or they got lucky and they cashed out on a tech startup or something. But in reality, most of the people in this community are just doing exactly what I mentioned. Like you're making a few smart decisions with housing, cars, and food. It lets you develop a high savings rate. You're kind of figuring out what are your values, how is this sustainable, and it's much more doable for the average person. And again, even if you're not finding this when you're 25 or 30, but 45 or 50, again, these principles really apply, and there's a lot of lessons you can take from this. So just understanding that it's not an extreme lifestyle and it applies to most people, I would love if people take that message out of this.
Awesome. And I just want to have one follow-up question that we never touched on earlier. You talked about housing, cars, and food. What tips do you have around keeping expenses reasonable when it comes to food?
So of the three, it's the third biggest expense. And also, like, I'm not like a eat rice and beans all the time type of person. But I think just like simple things like kind of figuring out where your phase of life is. Maybe when you're just starting, it might be more appropriate to really like prep all your meals. And like if you're just starting in your career or you're way behind on savings, like not going out for lunch if you're at work and packing, taking leftovers, things like that, just meal planning, that can be very helpful. And then, that's something that I have to say I'm pretty out of practice at this point. We're pretty not frugal with our food. But starting out, yeah, it is one of the big three expenses. And because it's a recurring expense, it does take more thought than housing and cars. But it's worth thinking about optimizing if that's going to really move the needle for you.
Yeah, probably. I find for myself, it's really just about having good habits around figuring out the meals for the week. Then you're not wasting or just feeling like, hey, we'll just order takeout or go out for dinner tonight. And it's easy to get out of the habit or the routine after you have a busy week or you go on vacation or whatever it is, right? So just being intentional with that planning probably.
Yeah. And I will say, I guess I will add, even to this day, we're not purposefully thinking about food costs much anymore. But if we go out to dinner, like I have no problem spending $100 to $200 on a nice dinner with my wife, but we're really not eating the fast food because, again, it's not cheap and it adds up. It's $30, $40 versus you could probably cook a really nice meal at home for $10 and you're not getting, it's not nutritious. It's just people do it for convenience and because it's fast.
Yeah.
But again, eating at those type of places, it does add up over time. And I guess to this day, we are still somewhat frugal with that. Like we don't really do fast food or things like that.
Yeah, I think that's just a good takeaway for anyone just from a health standpoint. If nothing else.
For sure.
Awesome. All right. Chris, can you share for us where our listeners can find you, connect with you, and what do you have going on?
Yeah, so my home on the internet is caniretireyet.com. That's where you kind of can find my regular writing, and it pretty much links out to everything that I do. The book is Choose FI, Your Blueprint to Financial Independence. That's been out for a while now, but it continues to be relevant and sell well. And then I guess I didn't even really talk about it all, but I actually am doing some financial planning with clients at this point in my life on a very part-time basis. And I do that through a company called Abundo Wealth. It's abundowealth.com, and you can find more about me there as well.
Awesome. So retirementplanningsimplified.ca. To all our listeners, if you click on the blog tab, find Chris's name, and in the show notes, we'll have all those. Chris, thanks for joining us today.
It has been a pleasure. I always like talking about this topic and getting the message of FIRE out there and hopefully making it more accessible for some people. So happy to do it.